Welcome back to the Dividend Diplomats YouTube channel, guys. You got Bert and Lanny, and thanks for rocking with us on this Monday morning. So, for all those starting to invest or investing in 2025, today's video is going to be all about investing $10,000 into 5 stocks to start your investing journey. And maybe you guys already do this, but we can't wait to dive into these 5 stocks.
Smash that subscribe button, everyone. Give this video a thumbs up. Help your boys keep growing the channel. This is going to be a fun video, though. This is going to be a much more high level. How do you build a perfect $10,000 portfolio? What are the stocks that you want to invest in to get that first $10,000? It's going to be a lot of fun.
Yeah, exactly. And this is not just any portfolio. We're not talking buy Tesla, buy Nvidia, buy, Amazon. We're saying as a dividend investor or a beginner investor just starting out, this is going to be a hopefully picture perfect as of right now. 5 stocks, $10,000 beginner investor portfolio that is including dividends and dividend growth, guys. So you might be a new to investing, or you might be new to just YouTube, trying to figure out if you want to be a growth investor or a dividend investor. Well, Bert and I, we've got 5 stocks again that you could put $2,000 into each of them, a nice starter $10,000 portfolio. And you'll find out that the yield is very solid and dividend growth is actually going to be better than what we actually even talk about, because a certain company should be increasing that dividend this year.
That's right. And what are we going to do for each one of these companies? For beginners, people that are newer to our channel, we have the Dividend Diplomats Dividend Stock Trader, which focuses on 3 metrics and a bonus metric. We run this screener on every stock we analyze. Why? Because it helps us find those potentially undervalued dividend growth stocks to buy. We do other research after, but this is an easy, simple 3 and a bonus step way to identify, is this stock undervalued today?
Yep. So, how to invest $10,000 as a new investor here in 2025, guys? We're going to start off with one of the biggest companies by market cap. We're going to start off with, the first 2,000 out of your 10,000. Let's go with Alphabet or Google, ticker symbol GOOG, GOOG. And Bert, I know you're a Google investor over there on your side of the
Yeah,
camera.
we've been investing for my wife and I when it was in the 170s, and luckily it jumped up to the 190s. But it is starting to come back down a little bit. I am so pumped up. This is going to be the first stock here, Lanny, in this perfect portfolio.
Yeah, they're trading at 193, 17. So you can actually get yourself, actually like 10 shares, rounded. And, based on the EPS, the PE ratio is only 24 times earnings, which is actually very low for Alphabet/Google.
Yeah, that's very low. Their dividend, they're new to the dividend game, Lanny. This is the first year they announced that dividend. Annual dividend is 80 cents. That's only a payout ratio of 10%, which is right where you want it for a high growth tech stock.
Yeah, high growth. They just started their dividend, and I teased it in the beginning. This is a company that should be increasing that dividend from that 20-cent announcement, hopefully this year, because that's going to skew the dividend growth overall on this $10,000 stock portfolio. But very bullish on what Google can do to the dividend front. The current yield, though, because it's only 80 cents a year right now, or 20 cents a quarter, is looking at 0.41%, which for a high growth is where you expected, but obviously lower than the overall stock market.
That's right. And how have they been doing lately? They're up 33.92% over the last 52 weeks, up 170% over the last 5 years. So there's been some progress here for Google, but they're also trailing some of their other Mag 7 stocks
Yeah,
too.
pretty good 5-year chart, over 2 trillion in market cap. So one of the largest companies in the United States and in the world, guys. So hey, first slice out of the 5-slice pie here, Google, again, ticker symbol GOOG. But let's
Yeah.
get into that second dividend growth stock as a beginner investor looking to have their first $10,000 stock portfolio.
Pepsi, everybody, ticker symbol PEP. Pepsi is a dividend king. They've increased that dividend for over 50 plus consecutive years. And man, have they been beaten down over the last 2 months, Lanny. And that's really what's caught our attention. So much of the dividend investing community, the X world, the YouTube world, so many people are focused on Pepsi because of the crackdown that might be coming on processed foods. But don't forget, they also have that soda business. They have the Life Water business. They have everything to diversify that should help them continue going forward.
Yeah, they don't have all bad snacks. I think they have a couple healthy snacks sprinkled in there, guys. But yeah, Pepsi, they're a dividend king as well. So If you're new to investing, Dividend King means you've increased the dividend for 50 straight years at least. So, Bert, what's that first metric look like on
Yeah.
Pepsi stock?
I can't believe I'm saying this, but their price is 142.64. They're almost at 140 a share. Forward earnings are 815. That's a PE ratio of 17.5x.
Wow, exactly. Almost below $140 per share for this Dividend King. So very solid PE ratio as well, cracked below 18 now, guys. Now the dividend payout ratio paying on an annual basis spread over 4 quarters, $5.42, a 66.5% dividend payout ratio, relatively safe, slightly above the 60% threshold that we like to see.
Dividend history, we've mentioned their king, so you know that's over 50 years increasing. They've increased for 53 years with a 7.505% 5-year dividend growth rate.
And you take it, beating the long-term view of inflation and doing it again. They're Dividend King, guys. I remember when we came out with that video a few years back. Now their yield, because that stock price is down almost 15% this year, the yield is so close to 4%, 3.80%. So what a nice time to grab some Pepsi stock.
Down 14%, almost 15% over the last 52 weeks, up 6% over the last 5 years. So they are basically flat when you think about it.
Very much flat. 200 billion market cap, so not a small company by any stretch of the imagination. So that's Pepsi stock. Again, we went through Google, Pepsi. Now, Bert, what is stock number 3?
Number 3. Sorry, Everett. I keep sliding for some reason. My chair's sitting on a slant today, so if you see me moving around, I'm trying to stabilize myself. Number 3, Johnson & Johnson, ticker symbol J&J. Much like we've talked about Pepsi a lot, we've talked about Johnson & Johnson a lot. We just featured Johnson & Johnson on our channel a little bit ago, asking, is this the perfect time to buy that Dividend King? Well, let's look at that price, Lanny. Much like Pepsi is getting close to 140 a share, Johnson & Johnson is getting right back to 140 per share as well.
Yes, they are. They are at 142.06, pretty wild, rocking a current 14 PE ratio, which is very low for J&J standards as well.
That is their payout. The annual dividend is $4.96. That's a perfect payout ratio of 50%. Again, we think a perfect dividend payout ratio is between 40% and 60%. So they are right smack in that middle spot.
J&J, guys, again, a Dividend King, just like Pepsi stock, been doing it for 62 straight years with a 5.54% dividend growth average. Now, Bert, with this stock down 13%, what has that dividend yield swelled up to?
Almost 3.5%, 3.49%. That's well above its 5-year average yield, 2.76%. I know, isn't that nuts for Pepsi, Lanny?
Nuts for J&J, yes.
J&J, oh my gosh, yes. It's
Getting
nuts
your
for
Dividend
J&J.
Kings mixed up, brother.
It's also kind of nuts for Pepsi, but it's also crazier for Johnson & Johnson, too.
Yeah, I mean, again, crushing their 5-year average of 2.76% by 73 basis points. Now, they are almost 2 times the size of Pepsi by market cap at $342 billion. I believe I featured them on one of my largest companies that I own being over that $350 billion mark, guys. So that is J&J, the third stock. But let's slide into one of Bert's favorites, one of the big oil stocks that we would say, hey, here's another slice of the 5-slice pie.
Chevron, ticker symbol CVX. And you're right, Lanny, I do love Chevron. And right now, I'm loving their prices even a little bit more. Chevron is trading at $153.14. Earnings per share, $10.50. That's a PE ratio of 14.58. Beautiful.
Good. Really do like that right there out of Chevron stock, guys. Dividend payout ratio, kind of very similar to, call it Pepsi, paying a $6.52 annual dividend spread over 4 quarters. So 62% dividend payout ratio on the payout ratio front. And keep in mind, we are using, the most current expectations from analysts. So if they either show 2024 or 2025, we're using the earliest year that they show. So hopefully that's conservative because they're usually lower.
Yeah, that's right. Their 5-year dividend growth rate, 6.51%. They've increased for 37 plus consecutive years.
Dividend aristocrat right there with Chevron stock, guys. They yield 4.26%, slightly above that 5-year dividend yield average of 4.31%. And that's really because during COVID, these oil stocks were at the bottom of the barrel and nobody knew where they were going. So those yields were so high during 2020. So it just hasn't been able to catch back up to being greater than that 5-year average.
Yeah, and they're up 4% over the last 52 weeks, up 31% over the last 5 years. Their market cap is 275 billion. They are a massive major oil company.
Yeah. So guys, that is the fourth slice out of the 5-slice pie. That's $8,000 that you would invest. Again, 1 Google, 2 Pepsi, 3 J&J, 4 Chevron. The next one, let's go into the Titan leader in the banking industry, Jamie Dimon's own JP Morgan Chase. JPM is the ticker symbol. And Bert, man, they are trading at $239.87. This stock has crushed it the last year, up 42% and up 76% in the last 5 years. That PE ratio is still only, higher for a banking standard, only 13 times earnings.
That payout ratio, then, their annual dividend's $5. That gives you a payout ratio of 27.23. Beautiful.
Yeah, so pretty low, just above Google, but below all the other stocks being mentioned here on today's video. Now, that 14-year dividend growth streak and that 5-year dividend yield or 5-year dividend growth rate average is over 7% at 7.25%. That's rock solid.
Yeah, that's nuts. So what's going on with JP Morgan's yield, Lanny? Well, they're actually below their 5-year average. Their current yield is 2.08%. Their 5-year average yield is 2.44%. Although banks have had a little issue growing their dividends over the last few years as capital has gotten tighter and a few other random events have gone through too. They're a little more prone to the Fed in some of their nuances before they can juice up their dividend heavily.
Yeah, absolutely, guys. And they're $675 billion by market cap.
Small.
So when we look at this is your $10,000 investment portfolio for a dividend investor or a beginner dividend investor. Out of $10,000, you'd have an average yield on that first $10,000 of 2.81%. That would produce $281 in annual dividends.
Beautiful. That's a nice blended yield there. So it gets you a little bit of the low yield tech exposure with Google, but also bringing in some of the other big hitters and more stable dividend stocks. So you get a nice little balance of dividend yield, dividend growth, and overall growth in your portfolio. I like it.
Yeah, and the way to, the average dividend growth rate, considering if Google is at 0%, so that's leaving a big anchor down on that, you're still at 5.27%. But now, even if Google, let's say they do 10%, right, Bert?
Yeah.
That brings your average dividend growth rate to 7.27%, which blended with the yield, you're over 10% then on yield plus dividend growth.
Yes, and I would put odds. I'm not a gambling man. I would put odds that Google's dividend growth is going to be closer to 10% than it is 0% in 2025.
And even if it is 0%, you're still doing very well at over an 8% compound factor here on the dividend in of itself. So that's your income growing with dividend reinvestment and dividend growth obviously happening. So that's a $10,000 dividend growth portfolio. Google, Pepsi, J&J, Chevron, and JP Morgan, 5 different industries. Let us know what you guys think about these 5 stocks if you're just starting out.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lady, what do we need to tell all the diplomaniacs out there?
You listen up, brother. You're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.